Hey there traders, if you're like most of us, including myself, you're super excited to set up your platforms, set up your options chains, get your charts ready with all of the indicators and your strategies so that you can position yourself for scanning the market and taking some wicked trades. This video is going to break down how to set up your charts, how to set up your options chains, how to position your platforms depending on which one you're using, and get you ready for active options trading. Sean Kozak here, tuning in again with Street Trading Academy, and for the world's best education and trading systems, make sure you hit that subscribe button and turn the notification bell on so that each time we put out content like this, you can get results. Be sure to give me a double thumbs up, that way we know you're engaging with the content. Now, what I want to do is I want to kind of talk a little bit about how this video segues into your live trading. We all love trading on the charts, we all love prepping our platforms and getting our indicators working and making sure that everything is working so that when it's go time, we can make money. What we do in our trading rooms is we always provide pre-built defaults for all of the platforms that we're trading so that our students and our traders don't have to worry about setting things up. And what we're going to do in this video is we're going to teach you exactly how to set up your platforms, exactly how to set up your options chains so that you can feel confident moving forward. Let's jump onto the whiteboard here. I want to talk about the key topics today. We're going to teach you how to set up all of the tools. We're going to break down the order type so that you can prep for live trading. We're going to break down your entries and exits so that you can start getting ready for taking trades. And then we're going to break down the indicators, the strategies, so that we can end with my favorite, a cheat sheet. Because everybody enjoys a cheat sheet because it makes it simple, easy, and reliable for active trading. So let's do this. Let's get on the charts. I don't want to waste any time. Got lots to cover. We're going to keep it super simple. And by the end of this video, you're going to be rocking the options market. See you on the screens. All right, traders, welcome back. In this video, we're going to be closing out the Intro to Options course with Options Explained Part 6, Options Strategies. Now, this is going to be a shorter video because it's going to be a segue and a bridge into the main education courses and the strategies courses where we have a very detailed options strategies program. And the reason for this is we have 5 different tiers of options levels, right? Level 1, level 2, level 3, level 4, and level 5. And within those levels, we have core strategies that need to be explained with chart examples and essentially different types of scenarios for each of those strategies. Now, in order to do that, I think there's a few things that you're going to need to make sure that you've completed and prepped. So this is exactly what this video is. It's kind of like a prep video. It's kind of like a segue video that's going to help you understand what to do next so that you can start looking to apply our core strategies in the options market. Okay, so first things first, the options chain needs to be configured. So we talked about this in the prior video, but I like to bring it back so that you understand exactly what's taking place. And I just want to kind of make sure that you understand all of the main components that you're going to need moving forward for active trading. So in the above example, you're going to see that I have an options chain. I took this screenshot from the QuestTrade platform, but we can look at some other examples off of, let's say, TradeStation or Thinkorswim and so forth. So it says in the above option chain, I have circled the strike price, the last bid and the ask, the open interest, the volume, and all 5 Greeks, okay? There's a few things you want to make note of here, and I'm going to just circle them, and we're going to talk about them together. The first thing we want to talk about is call options are here on the left, right? So we've got call options here. I'm going to use a different colors for that. A second here. So call options are on the left, and as a buyer, that's bullish. Right? We want to be buying call options if we are bullish the stock. Okay? The right side is we are puts. We want to be selling, or we want to be buying puts, we want to be buying puts if the stock price is expected to drop. Okay? Now, open interest is the number of active contracts. This is our liquidity. So open interest right here in these columns here, okay, you're going to see here there's no liquidity up here in those contracts. Then they start getting some liquidity down here, right? So you got to understand the difference between the open interest. You can see this is a great example. Different interests on the calls to the puts. We're going to look at some option chains so you can see the examples here in real time. And it says volume, number of contracts traded today, Okay, so you can see the volume column, okay, I took the screenshot, I think it was in the evening, so the markets were closed at the time I did that screenshot, so we'll go and we'll look at some live ones. The bid and the ask is the spread we pay as a commission and a premium. So that's the bid and the ask, that's the spread, that's the premium we pay on the option. Okay, that's the premium price. Okay, so the bid and the ask is over here, just like when we go in, that's the bid and the ask. And that's the bid and the ask, that's the bid and the ask here. You can see there's nothing on this side here. So we're going to go and look at some examples here. And then the Greeks are a risk measure of the options analysis. We talked about the two most important ones being delta and theta. Okay. And then also I want you to make sure you have implied volatility in there so that you can measure the implied volatility relative to historical volatility. Okay. So a couple things here. Let's go into the option chain. This is TradeStation. Okay, so just to clarify a couple things here, we're going to talk about what's in the option chain. And the reason I'm going over this again is to make sure you set it up. You're always going to have your strike price. Okay, you're always going to essentially have your implied volatility, the open interest, the volume, the symbol or the ticker. You can add net change if you choose to. The bid and the ask is how you buy and sell the contract. Okay, that's the premium, right? Now there's going to be a spread between the bid and the ask, right? You can see 550, 572 to 568. There's a spread there, right? Even though there's a really liquid contracts, there's always a spread in the option contracts. A little different than say just trading like futures or stocks with a 1 tick or a 1 pip spread, right? Or a 1 cent spread. Options contracts have a little bit of a spread between the bid and the ask, and I'm going to talk to you about how to get the best fill price, okay? So just make sure you set this up so you have this in whatever platform you're using. So if you're using TradeStation, which I'm using as an example, fantastic. If you're using Thinkorswim, make sure your option chain is set up the way we did here, right? We talked about the bid and the ask, the change code, volatility, open interest, volume, delta, theta. Okay, super important. Okay, if you're using, let's say, if you're using TC2000 for charting and analytics, or if you're using this as a demo trader or a sim trader, perfect. Okay, you want to make sure you set this up with all of the stuff on your calls and puts. And I'll give you an example of Questrade. If we're using Questrade as a platform, then you've got, you can set your option chain up as we have here. Okay, so I think you've got a pretty good handle on that. I'm assuming you've watched these videos enough now and you've been with us over the last couple videos to go through that, and you've taken the time to do that. If you haven't set your options chain up and you do not know how to use your platform, the first thing you want to do is you want to learn the platform. So whatever platform you're using, whether it's TradeStation, Thinkorswim, TC2000, whether you're using Questrade, maybe you're using other platforms like Interactive Brokers or eTrade or whatever you're using, just make sure you're using an options platform that's known for options trading. And if you need help with that, contact our onboarding team and we'll put you in touch with the right platforms. And then also you want to make sure you watch their training videos, right? Like if you're completely new to options trading and you don't even know how to use the platform, it's going to be a little bit overwhelming. So one thing you can do, take a look, I can click on this help button here. One thing I like about TradeStation is they've done a very good job on their help windows, and it just kind of teaches you how to use it, right? It's going to take a little bit of a learning curve. You're going to have to learn how to use the tools like driving a new car. I bought an Audi this year. I had an SUV. I still don't know how to use the air conditioning properly, right? So that's why it's and they've got videos here. They've got videos, and all platforms have platform training. Just make sure that you take some time. Like I would dedicate a week or a weekend or a couple evenings, and when you're rested and your mind is sharp, and just go in and set your platforms up. Make sure that your charts are all in the right place and you have everything according to what you need so that you can move forward more efficiently and you're not stumbling with the tools, right? So a couple things I want to make sure you understand is that when you go to place an order in an option chain, as a buyer, okay, as a buyer, you're buying to open, you're selling to close. As a seller, you're selling to open and you're buying to close. So that's important. So almost 9 times out of 10, you're going to start here. Be happy, keep it simple, right? And then After you've mastered buying option contracts, then you could look at learning how to be a seller of options contracts, okay? Now, one thing you want to know here when you get ready to place trades is we're going to be looking to negotiate the spread as best as possible. You don't always want to pay the worst price just because the bid and the ask is set on the option chain. You want to negotiate the spread. So you're buying at the ask, you're selling at the bid. So you're buying at the ask, you're selling at the bid. So to get the best possible price when buying and selling options, use 1/3 of the spread from the bid or the ask. Okay, so wait a second. What does that mean, Sean? How do I do that? This means I will add 1/3 of the spread to the bid and subtract 1/3 of the spread from the ask. So if I'm a buyer of options and I'm buying to open, I'm buying at the ask. So what I'll do is I'll take the ask price, I'll make sure I know the spread, and I'll subtract 1/3 of the spread from the ask. So let's do an example together. Okay, let's say I wanted to buy this option contract here at the top. Let's say I wanted to buy this one here. I want to buy at the ask, sell at the bid. Okay, well, I'm buying options contracts. Okay, so essentially, if I want to buy the 357 strike price, let's use a different example. Let's use one with a little bit of a bigger spread here. But there's not a huge spread between these two here. Not a big spread. So let's use this one. Okay. So I'm going to draw the math here on the chart so you can see this. If I'm getting ready to participate in this options contract, right, for whatever the case may be, or let's just grab a different one here. Let's say you want to do this one. Okay. Perfect. There's a 3-cent spread here. So let's say I want to do this one here. This one here is 357, okay? So right now, if I'm a buyer of options, I'm looking to buy that strike price. Well, that means I need to take a look at my bid and my ask. Well, the bid is $6.11 and my ask is $6 and approximately 15 cents. That's a 5-cent spread. 1/3 of 5 cents is essentially close to 2 cents. 0.5 times 0.3, 0.15. So you could take a 2 cents. Let's just round that up, keep it simple, 2 cents. It's going to fluctuate a lot, right? It's going to fluctuate a lot. So what you could do is you could take the midpoint. You could take the midpoint between the two of them, or you could take 1/3 of it, whatever the case may be. Like if you think if this is an even number, 0.6 or there's the 0.4, take the midpoint. So just 0.5, just try to get a better fill because they're going to drop down and fill you. It's an options contract, so you don't have to pay it. You don't have to pay the premium too much. So what you do is you look at this, you say, okay, well, and then what I'm going to do is I'm going to take my trade instead of just clicking on here and buying this. Okay, look, it's going to open up my option chain down here. I'm going to pin that down. So here it says place my order down here. Okay, well, I don't necessarily want to do that. It's my limit price. Well, what's the spread between these two? 357, 315 to 312. I'm going to try to get a better price. I'm going to get a limit price of, let's say, 6.13. Now you see the ask is dropping down. You can see the bid and the ask is changing. So you're going to look at getting the midpoint. I always try to look at getting the midpoint. If I know there's about a 5 or a 6 tick spread between the two of them, then what I'll do is I'll take the midpoint. So 6 to 7, 6.05. You're looking at a 5-6 spread, so I would probably go down at 610. Just get a better fill, right? Just negotiate the spread a little bit so that way you're not having to get in and you're not playing. And then you got to make sure you look at your quantity. So remember, when we look at doing buy, look at here. So it says buy to open or close, right? So you need to pick, are you buying to open? Are you, buying to close, right? It says order may be rejected. Open, close for a symbol may need to be set to open, right? Yeah, because you don't have it. You're not in a position, right? So essentially, remember, think about this quantity. For every one contract is 500 shares or 100 shares. So if I'm going into this at 1, that's one options contract. That's the same as, looking at the 100 shares. Okay, look it up here. And what I really like about TradeStation's trade platform, look at this. I really like this about TradeStation's platform is because I can go in with, I can see what my max loss is on the trade. I can see what the max loss is on the trade. Now remember, I want to get in with a 0.6 delta to be the best. Remember, we talked about how do I add probabilities. So let's take a look at the delta. Where's the delta? 0.6. Well, that's not the best option chain for me to be doing, right? So let's take a look at the, let's get out of this one here, and let's take a look at this one. So let's go down here to 0.6 delta. Let's go find delta 0.6 right there. So I'm just going to buy at the ask, click on that. It's going to open that up. So buy to open, and I'm going to negotiate the spread. 60, there's a 4-tick spread, so I'm going to go down to 70. Yeah, now let's see it's changing, so I'm going to try to drop it down to 70, right? And, get a better fill. They move quick, right? So sometimes it's, you never know. You just try to get a better fill as best as possible. You can choose the route. Right, use intelligent day. It's a day order. You put it in your sim account, right? And if you're practicing, if you're in your live account, obviously you're going to start in a sim. It's very important to start in sim. And it's a limit type, right? It's a limit type. You're getting in with a net limit order. And then essentially, take a look here. Like I can see right now, my max risk on this trade is $2,300. Well, if that's what I like about this platform is it allows me to be able to assess my position sizing, my money management. So if I'm getting ready to plan a trade, if I'm trading a $10,000 account, that's 20% of my account. That's very, very aggressive. So let's drop the contract size down to 1. And that's 1 contract. That's the privilege of having access to 100 shares. It's the leverage there, right? And now I know I'm only risking $470 on that. Okay, risking $470 on that. And if we look as a buyer, is that going to be good for implied volatility? Historical volatility is 18.4. Implied volatility is 18.4. It's pretty much the same, right? Pretty much the same. So technically, we maybe want to try to find a little bit of a better option contract. Let's go down here to the next one, implied volatility. I'm not really seeing anything amazing here. Let's go down to this one here, 16. This one here is a point. We really just want to try to see implied volatility is down here. See, 18. Starting to get a bit better, right? Volatility is low here. Just using a different options contract, right? It's all about understanding how to look for the gem here, looking at the best deltas. And we're going to talk about rules on choosing weeklies versus quarterlies versus monthlies and stuff. But I just wanted you to get familiar with knowing what it's like to get ready to place a trade, right? When we're getting ready to open an options trade, we're buying to open at the ask. You can negotiate a spread a little bit, try to take the midpoint or take 1/3 from the ask or the bid, depending if you're buying or selling, right? Since I'm focusing more on buying options, this will be taking it from the ask. And then ultimately what you do is you just make sure that you're not over leveraged, right? Like remember, contracts is 1 contract is 100 shares of the spiders, right? So that's, or whatever asset you're looking at. And so toy around with this in sim, get yourself comfortable with this, open a couple fake dummy trades, get yourself familiar with the options chain, make sure that you know how to read your order tickets. Your order tickets are here, guys. If you look down here, if you're using, say, Think or Swim, you want to know, like down here, you'll see you got positions and simulated trades, right? So if you're going to place a trade in here, you want to make sure you're using the right account, right? Make sure you're using the right account. Make sure you're attached to a sim account first. Get good before you get fast. Get comfortable with your platform. Make sure that if you're using, say, whatever platform you're doing, you can connect your accounts to it and just choose whatever account you want to use, right? If you're, this would be a live account here. If you want to set up a sim account, you can set up a sim account, right? But the point of the matter is making sure you understand how to place your orders. You're buying to open, you're selling to close for your buyer. And make sure you don't over leverage your positions. Negotiate the spread, and then make sure you're just taking some practice trades. Get comfortable just placing an options trade and just seeing what it's like in the market, right? And you can always reset your sim account because you're getting comfortable using the chain. You're getting comfortable using the information, okay? And that's the whole point. The whole point is getting comfortable using the option chain so that you know how to place a trade. Okay, so a couple things I want to do here moving forward is I want to talk to you a little bit about what we want to do to kind of help you understand things. So up until now, this has been an options foundation program. This options 101 is getting you familiar with jargon, terminology, getting you familiar with all the different aspects of the options lingo, so to speak. And as a trader, knowing the difference between a buyer and a seller of options. But we haven't really focused on strategies, like when do we want to be using an option, right? Because options is an alternative to the stock. So this video is a segue into the next courses. We've got an options program that's in our strategies course section. And my suggestion here, okay, is that before you go into trading options, you make sure you go through the education programs in our main courses for all of the indicator training and all of the platform training and all of the strategies courses, so that you understand how to use our stock scanners and stuff to find the stocks we're looking to trade. And then we can look at implementing the strategies, because we're going to be looking to buy off support or demand levels. We're going to be looking at trend lines, averages. We're going to be looking at, key areas of crossover trades and breakout trades and stuff like this. So ultimately, the whole goal is to have an entry strategy and then move to options to trade it. Okay, so if you're looking at selling options, we're going to be looking to sell options. We're going to be looking to sell pullback and bounce trades and averages and trend lines, looking at selling the breakouts, selling the opportunities, right? Now, when I say selling short, we're not selling short. We're actually buying puts, right? So we would be using puts as an example to this, so that you're not overwhelmed with just trying to be a short seller of option contracts. You're not selling options right out the gates, okay? So a couple things here is, as a rule of thumb, we always encourage getting good trading the stock first, then using options as an alternative. So why I say this is that you still need to go through the education course, and you still need to go through the strategies courses to learn how all of our trading systems. Like up until now, we've been teaching you just options, but we still need to implement the strategies. And that's why we've built these intro courses as a segue into the in-depth education program, so that you learn how to use the indicators, learn how to use the VWAPs and the averages, learn how to use the scanners, learn how to sort through swing trades versus day trades, right? These are the most important parts. So we're going to teach you indicators. We're going to teach you the strategies, trade management, risk management, money management. We're going to teach you how to plan your business, build a business plan. But the next step moving forward is getting your feet wet into the strategies courses in the education program, okay? This is an intro course. Welcome back, traders. Now that we got these topics out of the way, I'm super excited to start trading with you live in the markets. But before we do that, make sure that you don't forget the other videos in the series. There's links below, so click them. You're sure to learn a lot. Also, hit that subscribe button. Make sure you help our channel grow. And don't forget to share this video with a friend, so that they can get the results that you and I are doing as well. Last but not least, if you have questions or if you have any comments, leave them in the chat box below, so we can get social with you moving forward. We'll see you on the charts, traders.